Hello and welcome and happy Tuesday to you to the Investing Master Series. My name is James Boyd. Alongside me, Barbara Armstrong. We welcome her and many of you know her as well. She's in the chat, so if you have questions, go ahead and type those in and Barbara will be watching full time. I will also be watching those chats as well. We got Krishna, Bill, Leo, Fayez, Michelle, Greg, Sandy, and many others. Welcome to all. Now this class, Investing Master Series, we talk about stocks, options, technicals, fundamentals, all the above, intermarket analysis. So kind of think of this as where we try to bring it all together, okay? It's not going to be on a specific topic of technical analysis. The goal is to bring it all together, more of an intermediate to advanced discussion. And so just know if you have some questions, go ahead and fire those in. Let's see if we can include those. Now, you can also follow Barbara and myself on X if you go to at Barb Armstrong CS or at James Boyd CS. You can actually see our updates there. We do post educational updates and educational examples. They are not recommendations, but and also we do post about different events we're doing, different classes we're doing, and so on. Check that out. Now, as we get started here today, I want to give us a quick reminder. When we talk about options, remember that options carry a high level of risk and are not suitable for all investors. The information provided here is for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. And also, our examples will be done on the Paper Money software application. Remember that investing involves risk, including loss of principal. So that's a big one. We want to know what is the potential loss given the strategy. And also remember that when we talk about short options, if we're talking about selling calls or selling puts, we're talking about American style options, and those could be assigned, okay, at any time up to expiration, regardless of the in-the-money amount. Meaning, if you had a covered call, someone could take your shares prior to expiration. You sold the put, you could be the buyer of the shares prior to expiration, not just at expiration. Now, also remember when we talk about this one right here, the risk of REITs. I don't plan to talk about REITs, but just understand that if you do, you know, it's associated with the direct ownership of real estate. Sometimes we'll bring that up. Occasionally, that is a separate asset class that many investors look at. We will bring up the real estate sector here today. Could it be starting to get a move? We'll find out. Now, we're going to talk about kind of where we see some of the prices overnight in the trading, okay? We'll also talk about some of the where the indexes are. Where do we see that strength still? We'll also talk about the NASDAQ. Could the NASDAQ breach that all-time recent high? And then also we'll talk about kind of some of the sectors that are a little different than what we normally see that have been getting a little push. Now, we also will talk about current positions, which we have, which are inside 10 days expiration, which we need to address. And I'm going to kind of talk about some exiting and rolling examples as well with new examples. So today is very application oriented, and you're going to kind of see that practice here today in the Paper Money account. So let me just go ahead and just share with you just real quick something. If you said, hey, where could I actually follow this? Okay, where could I actually see the recording? Well, number one, okay, this is, if you go to youtube.com, we have a page called Trader Talk Schwab Coaching Webcast, okay? And what you're now going to see here is you can follow this or subscribe, okay? Subscribing is free, and it's just right in the dead middle of the page. So that's number one. The second, if you said, and Barbara has this too, but any classes that we teach, they're broken off into playlists, okay? And what you're now going to see is for this class, we have the Investor Master Series. And let me actually just do this just real quick. There it is. Let me send this link out to you. It's going to be sent right now. Now, what you're now going to notice is it's going to give us a playlist of the last couple of classes that we did. Let me give you a taste of what they've been like. Why some option traders sell options. Now, think about the topics and then think about the market conditions, okay? Asset classes, thinking outside the box. We talk about intermarket analysis and correlation, which I've been having a lot of fun with. Okay, I shouldn't laugh. But the biggest actually thing has been very interesting, okay? Some very interesting correlation lately. And I'll bring it up again here today a little bit, especially when we're talking about the US dollar and commodities. Now, also setup of continuation patterns. Now, why the heck did I talk about continuations patterns on May 20th? Well, because that's what we were seeing. Bullish trend tsunami. Okay. Now, a lot of people kind of were saying some comments like, well, we got resistance. We're not really sure. There's still mist in the air. We can't see what's going on, things like that. We talked about kind of back on the 13th, could that bullish trend tsunami be coming? Okay. Bullish and bearish setups. So really the 6th, May 6th, was over a month ago, was really kind of the last time we kind of talked about bearish setup because bullish trends kind of took over. Okay. Now, let's go ahead and just kind of take a look at, now, let me ask you a question, okay? Let's imagine the investor said, hey, James, or someone asked you a question, and probability trader, I've never eaten here, Dragon Rider 108. What are some things that happen in the overnight session in terms of price movement? What kind of stood out a little bit? Now, I cannot say the name, but if we're talking about maybe an alternative asset class or a new asset class over a couple years ago, that asset class, 2 of them, okay, two of those names in that space had a pretty good move overnight, okay? I won't say the name, but the new asset class as of about 5 years ago had a pretty interesting move overnight. The one thing that we did see is if I pull up the US dollar, okay, speaking of correlation, that US dollar is still pressed down. It's kind of like making like in a descending triangle, if you will. Okay, and we might say, well, what does this have to do with anything? Well, if we listen to the class on correlation, if you get the US dollar actually going down, that actually could mean that some currencies could be going up. Okay, I mean, kind of write that down. So if we actually said US dollar down, okay, it could actually mean, let's say, some commodities, okay, up. Now, if I were to say, well, which commodities? Which? Now, last week we talked about silver quite a bit, okay? I think probably about 10 days ago, we talked about gold, and I really mentioned gold miners mostly, and then secondarily, gold price. When I say silver, we talked about the silver price. Now, the one thing we would also include that I said yesterday is if you also take a look and say copper was also getting involved, okay? Copper. Now, if you really like to kind of get into, let's say, other types of commodities, as I kind of mentioned, we have cattle prices, okay? Okay. And we also, for example, have hog prices, okay? And you might say, what does that have to do with anything? You got to remember, commodities are just not precious metals, okay? They could be agriculture as well, cattle prices, whether it's feeder cattle, live cattle, and you got lean hogs. And those prices have actually been going up as well. So just remember, there's different types of commodities. Now, if we're talking about currencies, probably the 2 standout currencies are still the euro, Canadian dollars up in there, but also we would include the Australian dollar as well. Okay, so it's kind of interesting to kind of see that if we kind of see one asset class like cash or the US dollar, what inverse potential opportunities might it bring? And boy, it's been bringing some trends. Okay. Now, if I go back to, let's say, just real quick, let's say the indexes, we know that the Russell, we talked about the Russell 1000 being more mimicking the S&P 500, the Russell 2000 squirting to the upside. Okay. Now, squirting to the upside. I've been waiting to say that all morning. Had a breakout. Yesterday, for example, not much of a pullback. Okay, usually day 2 is the red candle, didn't get a red candle. And then what you're now going to notice is a little continuation of that. Now, some investors might say, James, it kind of really looks like an inverse head and shoulder. And I think, hey, you could say that, okay? Now, what is it that we're really using the Russell 2000 for? Well, number one, some investors might just buy the index in general. Number 2 is they also kind of use this as a sentiment gauge. Are investors willing to take risk? I did not say, are you willing to take risk? Is your neighbor willing to take risk? Your brother or sister willing to take risk? We have to understand something. When someone buys stocks, they have discretionary money, okay? And the stock market is not for everyone, okay? Some people don't have discretionary money. So you got to be very careful of like, well, you know, if someone was in a situation where they don't have a lot of liquidity or discretionary money, the way that they look at the charts of the market is different than someone who has capital or discretionary means, okay? And they're trying to invest for the future and not just survive for the day. Now, I say that because I think it's very important, because our technical analysis can become tainted to kind of maybe some other things that are out there. We know the stock market's not for everyone, but what is the stock market doing? Okay. And if you look at actually kind of the Russell, could it go to that 2203? Could it go to the 2277 and so on? We're kind of using that as a sentiment gauge. And if we see that going up, some investors are kind of saying, look, I'm trying to chase the performance, and I'm also trying to get maybe higher potential percentage returns. Now, of course, if we're talking about, let's say, taking risk, and when we say taking risk, we're talking about trying to find companies that have higher growth prospects, okay? So imagine you said NVIDIA, and then I said to you Walmart. And we said NVIDIA and Walmart have the same growth forecast on earnings per share and revenue. And you would say back to me, malarkey. Exactly, okay? So investors are trying to chase some companies that might be a little bit more speculative in terms of what they can do. Now, that's kind of the problem. You don't know what they can do, but some investors want to trade that speculation versus something like a utility company or Coca-Cola and let's say Walmart, et cetera, that is more what some investors deem as boring or more probabilistic, that it's just going to hit the same numbers that it did before. All right, so that's important to understand. Now, there's times where the investor wants that, okay? But there's other times where the investor says, nah, I want something a little bit more speculative, okay? Now, so seeing the Russell go up, see the stocks actually going up is also pretty interesting. Now, if we also go back to just real quick, the sectors. Now, we just talked about the US dollar press down, and we also talked about kind of that inverse correlation a little bit. Here's what we need to remember. Kevin and I actually do the class on ETFs on Friday. I'm not talking about ETFs, I'm just saying that we have a class on that, okay? Barbara also did an ETF class yesterday. Those two classes on Monday and Friday, they're not recorded. But you also have to remember is if someone sees maybe a sector that is going up, nobody says that the investor has to buy an individual stock. The investor might just buy a group. Now, in the last 3 months, a lot of people have actually said the market has been more volatile. Well, the next time we all say that, the investor might say, well, maybe it's not a great idea to buy individual stocks, potentially more risky. Maybe I'm going to buy a basket of stocks with an unequal representation, okay? They're not all equal, of that pie, if you will, or the basket. Remember that. And don't think if someone actually buys a basket that it can't go up or down. That's malarkey, okay? So basic materials getting a little push. We also see that push in energy here. The difference we see now in energy is we actually see a little crude oil, okay, pushing to the upside. Historically, crude oil went nowhere, but we've actually started to get above 63. I don't want to say this, but are we getting to that hurricane season and where there could be a little bit more speculation of potential risk and so on? Now, the other one we actually want to bring up is the real estate for just a second. Real estate has been pressing into this 206. We had a double bottom at 200-ish, and it kind of looks like it wants to try to go a little higher. Now, some investors, they like real estate. They like kind of some different parts of real estate or some industry groups of real estate or classification. And if you said, James, where can I see that classification? Like what types of real estate? Just real quick, if you said, I don't know where that is, to see a quick listing, go to the scan, Stock Hacker. And if I said scan in and we went down to, let's say, buy industry, and I want to go to real estate, here's where we actually get a little tasting of really what types of real estate they are. All real estate is not the same, okay? We know that if someone chose, let's say, healthcare REITs, okay, that's not the same as, let's say, office REITs or hotel REITs. Some of those REITs or real estate actually could have more risk, okay, than, let's say, residential REITs where people actually live. I mean, at the end of the day, people have to have a place to live. But that's where you can actually get a little sense. And there's single family and multifamily. So the one thing I want to kind of point out here today is keep an eye on real estate. Could that start to tick higher here? Okay. Now, so I want to mention real estate. I will also include in that comments transportation. Okay, rails, airlines, keep an eye on those. We said basic materials. Am I missing anything? And I know I am. I mentioned energy, basic materials, and I'm going to include communication. Now, if we take a look at communication, that was one of the horses, if you will, okay, that was pushing to the upside for a while. Meta, Netflix, and so on, they've really been the leader in that space. And here we are back to the all-time, pretty much up near the all-time high, okay? Now, when you see the communications, you're kind of wondering, like, what is the NASDAQ doing? Well, you got to take a look at this NASDAQ now. And if you take a look at the NASDAQ in general, we're what? How many points are we off? 300 points. We're 1% away from that prior high, okay? Now, if you kind of look at the levels that we've been looking at over time, these are the fib levels we have. The word I used on Friday is we've been grinding higher. And when you have grinding higher in terms of price action, short, shallow pullbacks, you tend to go up higher. Speaking of that, the VIX pressing down, staying lower. Some investors might say, thank heavens. And that's actually just been sitting here at about 17-ish. The lower this stays, the greater the chance that the market can grind its way higher, even though some people don't believe it. Now, what I believe really has nothing to do with Monday through Friday, looking at charts, okay? Sunday afternoon, if you look at the futures. Okay, now, we'll also include, if you look at the industrial sector, we've said this for a while, it's going to be very difficult to get a recession if the industrial sector is smashing to the upside, okay? So really, you got industrials, base materials, energy, communication, and probably that dark horse on the outside, real estate. Okay, is there any questions? Now, here's the deal. There are some sectors that have not even participated at all. Now, James, some people might say, well, not all sectors are going up. They don't always have to go up. Can someone become a millionaire if someone else doesn't have a job? Sure. Can someone else become a billionaire if someone else doesn't have a job? Sure. Okay. So you just have to understand that not all sectors have to go up. Now, the more the sectors participate, the wider the breadth, but they don't all have to go up equally, okay? We have to realize that socialism is not on the charts. Some charts are just going to go up because more investors are interested in those, okay? So not everything has to go up. This is not a fairness market, okay? It's what do investors want to invest in. It's very important here, okay? Now, what I want to do is I want to kind of go back to just kind of a couple stocks, and I want to kind of bring up a couple Dow stocks, and let's kind of bring up the market watch for just a moment. And the Dow was an area that we kind of focused on yesterday, okay? Now, sometimes people, man, they love to run searches. And some people, they don't run in searches. Some of us look at the same list every day, and that's fine, okay? And the list that we like to look at, especially every day, is the Dow Jones 30, large cap companies, and it's also liquid names at that point in time, and also potentially liquid options. Now, what I want to do is I want to rank this by percentage, okay? Now, one of the things that we're actually kind of seeing on this is one of the stocks I want to talk about, well, kind of two of them, is we see Chevron actually right at the top. What does that have to do with what we've just talked about? That was not a waste of 10 minutes. That was done with specific intent. Well, if we just said energy is trying to move up higher and Chevron is selling that oil and natural gas, could they benefit from the rise of oil prices? That's the idea. Okay, so Chevron's up there. Now, what you're now going to notice is if we take a look at the trend, 3. If we look at the trend on the weekly, it's a 2. So if we have a trend 2 on the weekly chart, that is really most likely explaining to us that it's really showing maybe a diagonal breakout, okay? Now, when we also take a look at this, you're going to see that when we look at the RS, which stands for relative strength, we're going from right to left. 63 is 3 months ago, 42 is 2 months ago, 21 is 1 month ago, 10 is 2 weeks ago, 5 is 1 week ago. You're seeing that we're going from red burgundy to red to light green to green. What is that telling us? We're seeing a little rotation of strength into that area of, let's say, Chevron. We're also seeing a little 20-day high on Chevron, and we're also seeing a little today breakout, which makes sense because those columns right there are going to be linked. The 20DH day high or the 55, that's really just looking at the duration. Okay, is it hitting a 20-day high? Is it hitting a 55? And the difference between the breakout column is it would also kind of show breakout today, breakout +1, breakout +2, and so on. It's kind of looks at the timing of it as well. Now, I want to kind of bring up also Nike as well. So I'm going to focus on those two to begin with. Now, the thing, what you also notice with Nike, it's the same thing. Now, notice on Nike, when you take a look at that, it was burgundy, light green to green. Now, when we say relative strength to what? Well, it's actually using the benchmark, the SPX, okay? Why do we choose the SPX over the DJX? Could you actually include the DJX? Could you take a SPX, put DJX? Yeah, you could, okay? But the biggest actually thing, we're doing it to a broader grouping of stocks. We're saying, is this stock starting to heat up, okay, relative to the S&P 500? Let's take a look at Chevron first, okay? Now, if you looked at Chevron, if I were to ask you this, what do you see on the chart? Okay, so if I said to you, where do you see support? Where do you see resistance? What do you see? Now, if I were to kind of answer that question myself, as I'm waiting for your answers, I'd probably say underneath, let's say 135. I'd probably say most of the touches are probably about 140-ish. And then what we're seeing as of lately on the chart that is kind of interesting, we see a little 2-day gap. It gapped that day from Friday to Monday, and it gapped up again. Now, ladies and gentlemen, boys and girls, we need to understand, what is gapping? Well, gapping is where the stock actually went to bed, yesterday. It closed, let's say, where did it close yesterday? Closed at 140.76. Now, some investors got on the computer last night, said, hey, I saw what crude oil actually did overnight. Is there a correlation to what crude oil is doing? Now, speaking of that, let's actually go to that. How do we find that again? Let's go to studies. Let's go to add study. And what we're going to do is say, is there a little correlation here? Now, if I bring up, let's say, a custom symbol, and what I'm going to do is I'm just going to kind of overlay a line. Would you say, so the candlestick chart is Chevron. The purple line, fuchsia, is actually crude oil. Is there a relationship on crude oil to Chevron and vice versa? Well, my gosh, it looked like when crude oil crashed down, so did Chevron. When actually crude oil went sideways, so did Chevron. Now, some people will actually buy crude oil itself, the actual physical price. And the other thing is some investors say, no, I don't want to buy the actual price. I want to buy a company that is sensitive to what that price does. Meaning they might say, look, I don't trade futures. I trade stocks. That's my point, okay? So they might say, I trade stocks, but I understand there's a correlation to what that price is doing. Okay, speaking of that, that's what this portfolio is doing. Now, let's say the investor says, look, I'm going to right-click on the chart, and I'm going to go to, let's say, buy custom, and I'm going to say with OCO bracket. Now, some investors, they might say, James, I'm kind of thinking about maybe that old, here's that low price right there, kind of the bottom there, maybe a little less. James, draw some better lines here, okay? You gotta call me out when that line's not probably where it needs to be. Probably the first level is probably right around 149 and change. If we kind of were a little bit more optimistic, okay, which I usually am, I wear dark sunglasses everywhere I go, okay? Everything to me typically looks like opportunity. 152, 158. Those are probably the markers. Now, the question now becomes, well, how high could it go? Well, what's leading? Is Chevron leading or actually the price of oil leading? Does anybody know the answer to that question? Does anybody know the answer to that question? Now, you got to remember something. Chevron is also tied to the stock market. It's also tied to crude oil. What does it have a greater relationship to? Well, if I actually now you could really look at this and probably say, you know what, James, when I take a look at this, and let me duplicate this. What I'm gonna try to do, if I can here, yeah, it's not gonna let me do it. But if I, for example, looked at, let's say, take out the CL and just put SPX, example given, okay? If I did that, we're just going to now say, is there a relationship to the SPX or the Dow, et cetera? And I said, is there a relationship stronger to oil or is it to crude oil? And I know what some of you are thinking, James, it's probably more related to what the crude oil is doing. The purple line now is not crude oil, it's the SPX. Moral of the story, the SPX is shot to the upside and left crude oil severely lagging, okay? So we'd probably say right now there's more of a correlation to oil. So what I'm going to do here is I'm going to put a target right around 152.80, okay? Now, I'll be honest, I feel bad for investors who don't know about correlation because what they're doing is they're never really knowing what to look at, okay? And it kind of feels like you're chasing your tail all the time, okay? So I'm telling you, you need to find out what are some of these stocks correlated to and watch what is leading. I think many investors would say crude oil is probably leading actually the energy stocks in general, and but also has a relationship to the equity market since it trades in the markets. Now, I'm going to put a stop here underneath the breakout level, 139.87. Now, the question I get sometimes is, well, James, if you knew about options, why would you trade stocks? Answer, because I don't always want everything to have an expiration on it, okay? If we just did options every time, whereas 1 to 2 month out options, you'd be cycling through a portfolio quite frequently and taking on quite a bit of risk. Some investors, they don't want there to be actually an expiration every 1 to 2 months and have to reestablish positions all the time. Now, so they do a blend potentially, and that's up to them if they decide that. 137, okay, 07. And what I'm going to do is take one out. There it is, data GTC. Now, on this example, we're going to put a target there, stop there, and you got a GTC, okay? Now, what I'm going to do here is, if someone said, James, I'm going to practice trade the Chevron trade, and what should I be watching? Many investors will be watching what the crude oil price is doing. If crude oil continues to go up, could that relationship continue? That's the idea. Now, I got to bring this up just real quick, and I'm going to do this real quick, okay? I want to put that trade right in that paper money account, and don't worry, I'm going to go quick. Are there any questions with that, okay? Any questions? So what I'm doing is I'm just putting this in the paper money account, and I want to make sure Chevron, and then I want to go to just real quick Nike for just a moment, okay? And I'm just filling this out on this other screen, and I'll slide it over in just a moment. All I'm doing is I'm replicating, there it is. It's going to be about 44 shares. Target price is the same, 152.80, and you got about 137, okay, 07. So when I look at this, we're going to put that in the IRA account, and that's going to look as follows, okay? So it's going in that paper money account, about $6,500 worth of capital. This number of shares is about 44 shares, and I'm going to go ahead and confirm and send. Let's see if that trade can fill. Now, remember with the stop order, it's saying sell the stock if it goes to that price or less, but it's assuming that the investor got in the position. The target and the stop are not valid until the order fills, meaning it buys those shares of stock, okay? And I'll fix that. I was afraid of that. But now what I'm going to take a look at here is, let me kind of move that over, but I will fix that. That will be our numbers. Now, let me go back to just real quick the Nike example for just a moment. When you also take a look at Nike, okay, you're also going to see that this one kind of has, now what happens sometimes is when markets go to the upside, some people will say, well, yeah, James, a lot of things have gone up and like, where's new potential. You ever heard that before? Well, like everything's gone up. Well, what investors will do is they'll kind of circle back to areas or stocks that maybe haven't gone up. Keyword is yet. And could they? Now, what I'm going to do is on Nike, what you're going to notice is if we said, what type of price pattern do we have on Nike? Well, Nike has just filled in pretty much the gap in the chart. Is that bullish or bearish? Now, where do you see the gap in the chart? Well, that gap in the chart, if I kind of drew it, is like right there. It's done over time, right? Grinding to the upside. Notice that there was a lot of bad news and the stock fell down from that news and it made lower lows and lower highs. Now, if you have a CEO and you have a board, okay, who says, look, we had some problems, they're paid to try to solve those problems, you think, okay? Can they reverse some of that? Can they become more efficient? Can they create new products and so on and services? Well, now all of a sudden we filled in the gap. The next gap we actually see on the chart is right about $68. Now, some technicians, they say, James, what I would really like to see is there kind of maybe a width of 6, 8, 10% to go from one line of resistance to the next line. So who cares? Well, traders care. That's who cares. Now, remember we said this before. If stocks are breaking out, maybe new bullish investors want to get in. Fine. If someone's in Nike, they might say with the breakout, I'm going to add to the position. So you could actually have two different types of bulls, but the same idea. And the third type is that if people were bearish, the bearish investors, if they were short shares of stock, they could be exiting. And that means if to get out of their short stock positions, they're buying those shares back to cover their short position. So you could actually have three different types of things going on. And if we said four, well, some investors could buy long calls with the right to buy the shares. Speaking of that, okay, if the investor said, you know what, James, I want to actually maybe have a right to buy the shares. I don't want to exercise that right now, but I just want to have the right. Okay? All right. Okay? So kind of think of it like you put the stock under contract. You're buying a contract, and the contract is for the 18th of July. And you have a right to buy those shares from now until expiration. When I say at expiration, until expiration, I'm saying the 18th of July as well. Now, if the investor says, you know what, I want to have a right to buy those shares, and that right is not free, and I'm going to pay some money for that. Now, remember that premium right there, that $4.65, that option has intrinsic value, think equity, how much the stock is above the strike price, and some time value, meaning 38 days to expiration. Some of that option is time, extrinsic value. Now, the investor said, you know, James, I want to kind of buy an option that has a little bit more intrinsic value. Now, in my simplistic mind, I like to think about intrinsic value like equity. When I think of extrinsic value, I'm thinking like interest slash, when you think about what is interest, interest is like paying for time, okay? And the 615 is if you add these two together, you pretty much get the 615. Add 1 plus 2 gets us to there. Now, some investors, they like more equity. Now, you got to remember, equity is where it is now. That intrinsic value is where it is now. That's not saying it's always going to stay there, okay? If we know that if the investor buys the 60, there's a greater chance of the stock closing above 60. That does not mean the investor is going to be profitable. There's just a greater chance that it could be in the money, okay? Meaning above the strike. Now, what I'm going to do is I'm going to right-click on that 620. We're going to go buy custom. And we're going to go with OCO bracket. Now, on this, this is like a classic swing trade, or I should say swing, okay? Now, if we take a look at this, and we went back and said, you know, James, could we see that Nike swings back up to really that old high? Now, I just want to make sure my lines are where they were. Now, let's say the investor says, James, if we go up to 68, sell that call. Well, what we're going to do is going to go limit market dated GTC, okay? And we're going to click on the gear. And we're going to say, look, if that stock price gets greater or equal to $68, sell that call. Now, we know that the longer that we hold on to the call, the more time decay that is coming out of the option. So we don't want a slow move, hurry and get there. Because if we get to 68, there's more intrinsic value that is pumping up the value of that option, okay? Now, hopefully the option gods will hear us, as some people say. Now, it doesn't always mean it happens like that, even if it gets there. We're going to go to stop, market, and as far as what's the exit. Well, some investors might say, James, I know I have the right to buy the shares all the way to expiration, okay, and at the expiration day, but I'm going to set the stop like right underneath $62. And I'm going to say if we go lower than 60.71, get us out of the position. Now, you can really get a sense of really what that potential loss would be, approximately. Now, if we had shares of stock and the stock is at 63.81 and that stop is at the trigger to exit is 60.76, that's $3. So a stock investor, if they're trying to imagine what that potential loss would be, well, if the stock goes down $3 and they have 100 shares, they know the potential loss is really about $300. Same thing with an option trader. Stock loss, if the stock goes down from 63.81 down to 60.76, $3. Take that $3 times it by the delta, okay? And that's pretty much approximately what that loss could be. Exactly? No, because that bid-ask spread could change, okay? The other factor is how long does it take to go down there? And the longer it takes to go down there, the more time decay that actually that option will erode, okay? Now, let's go back to 60.76 and put it right here. So I'm going to say symbol, okay, Nike, method, okay, and I actually got something. Yeah, sorry about that. It was on that. It hit the other screen. There it is. Nike, okay, symbol, Nike, less or equal to. What was the price? 60.76. Type that in. Now, I want to kind of explain something. I want to try to get this order filled, okay? For sometimes this is hard for people to understand, okay? Why wouldn't someone just buy the shares? Well, they could, okay? But why are they buying a call? Well, they're just trying to get a leverage return. They do not have the same delta as someone who's buying shares, okay? They're getting a fraction of the move, and that fraction is delta, okay? Delta is just the change in the option price or the change in the stock price, but they're just trying to get a fraction of the move, and they're not trying to tie up as much capital. Now, if I'm going to go ahead and send this, let's see if we can get that trade filled. So it fills. So let me kind of throw this question out here. How could the investor exercise the position? How does the investor do that? And it's not complicated. If the investor says, look, I have a right, I put under contract the right to buy the shares at the strike price, simply right-click on that and say exercise. Exercise does not mean we're going to do yoga or go to the gym. Exercise means we're exercising our right to buy the shares at the strike price. How many shares? Now, James, why are you thinking about yoga? Well, tonight is yoga night, okay? JB is going to be in the park with my wife, and it's yoga night. Oh, man, probably TMI, okay? But I'm thinking about how much pain I'm going to endure, okay? With thoughts and prayers, please. Now, if we take a look at this, how many shares are we buying? 100 shares at 60, so about $6,000 worth of stock. Now, can the investor sell this option prior to expiration? They could. They'd have to check the liquidity, okay? Now let's go ahead and take a look at this. I want to go back to also the two that we mentioned from yesterday. But a lot of times, you know, if someone sees a move, whether it's a swing trade, do they have to buy the stock? No, it could be something. Now, James, why did you bring a long call in there I don't normally see you talking about long calls. Now, who said that? I said that. So James is asking James a question. Well, the one thing is, okay, is when you look at the implied volatility on many of these stocks, the IV percentile, you'll notice that when you look at many of these stocks, low IV percentile, okay? Now, Nike has an IV percentile 49. It's not super low, but you're going to notice that many of these stocks, they really have a green background. What is the green background? Well, so the number in the box represents the IV percentile, and the background color represents is the moving average, is the stock above the moving average, the MACD up, and the stochastics up. Think of it as like potentially what we historically would call 3 green arrows, okay? All right. Now, so that's why, you know, if people are going to be buying calls or puts, they like to see low implied volatility. And if you look at many of these, they're low, okay? So that's when, now, the lower the implied volatility, the lower the option prices. The lower the option prices, the lower the break-evens. The lower the break-evens, the greater the chances that the stock can get above that break-even, okay? Now, let's fast fire some, and I'm going to go back to kitty cat. Meow. Now, I want to kind of bring up this one. Let's kind of talk about selling. Now, we talked about selling last time, but let's kind of talk about this. Now, yesterday, I saw something very interesting online, and someone said, yeah, you know, I got in this position, and I got out before it fell down. And I literally went and looked at that position, and the stock had fallen down 20 cents from the high. I tell you what, it's going to be very difficult to ride any trends at all if the investor won't allow these stocks to inhale upward price movement, exhale downward price movement. And if 20 cents is making the difference between buying and selling, that's not what we're talking about, okay? Be very careful as far as zooming on technical analysis that much. Something pulling back 20 cents is most likely not a sell signal. It's emotion, okay? And by the way, that stock didn't even move 0.2%, and the investor thought it was a sell signal. Now, it might have been for them, but I'm saying just be careful of that. I see a lot of that, and it's like, is someone really trading the trend? I don't know if they really could be, okay? Now, notice on Caterpillar, yesterday we kind of, did we break out? Yine, okay? Yine just means yes and no. Yeah, we closed above it, but no, we didn't break out because we didn't open above the line. Today, if we were to look at that, we see the intraday low right near the horizontal resistance level. Now, some investors might say, James, that looks like a hammer-like candle. Now, of course, if we're getting energy to go up, base materials to go up, could industrials go up? Could the Dow Jones and so on, could they also rise as well? Now, remember, some investors, they just try to play levels, meaning if it breaks a line of resistance, can it go to the next level resistance? Now, some investors, they don't like to have time decay, okay? Some people, they don't mind to pay interest on certain things. Other people say, I like cash, and I like interest to be paid to me. Okay, so there's two mentalities. Now, in the world of options, some people say, look, I don't mind to pay for time decay, okay, because I want that higher potential upside potential. There's a pro and a con. And the other one says, look, I'll take a capped premium, but I want to try to capture that time decay. So there's a con and a pro. So both sides. If someone goes long an option, long call, they want the unlimited upside. If someone sells a put, they want the upfront premium, and they want time to try to be on their side. Now, what we're going to do is on Caterpillar here is we're going to go down and sell the put. Now, one thing I want you to capture out of today's lesson is the idea of practicing long calls. Number one, I want you to do 2 of those. I want you to find some stocks that could be having fresh, smell that? Fresh breakouts, okay? And I want you to practice buying a call 1 to 2 strikes in the money. Second, I want you to practice selling 2 short puts. Okay. Now, how do you really find out what you like? You test them both. Now, in our class, I would like to think that everyone is proficient and understanding how at least a cash secured put works. Speaking of that, now what we're going to do is we're going to come over here to the sell the 340. Now, what I'm going to do for time's sake is I'm going to just sell this 340 by itself. Now, if we had a little bit more time, we could buy a put out of the money, etc. Noted. Okay, if I had a little bit more time. If we sell a cash secured put by itself, it's a bigger credit and it's a lower break even. If someone sells the put, they're thinking the stock could stay up above that strike price, and there's a higher time decay since we're not buying a put. But if we did that put, if we said, well, what put could that be? Well, that put is going to be really probably about the 300. And if we just did that for time's sake, and I said we weren't going to do this, but since we went there, 300, we're going to put it right there. And some investors like that because they like to know that there's some downside risk. Noted. Notice it lowers the actual credit as well. That's how we're going to finish. Gave you a homework assignment. 2 long calls, 2 short puts. I would like to think that everyone here feels pretty comfortable with actually cash secured puts. Let's continue to practice that. Stay tuned for our next webcast coming up right at the top of the hour. Also remember that, for example, that there's a playlist for our class, and this class will be posted in that playlist. So stay tuned for that. Thank you, Barbara. Stay tuned for Cameron May coming up next, right at the top of the hour. And also remember, with what we discussed, it was done for example illustrative purposes only. And this has been the class on the Investing Master Series. Thanks to Barbara and to all of you. Thanks so much. Take care. Bye-bye.